Hey everybody, Shane Cass with Keller Williams and Stanton Residential. Thought I would start a series on the home buying process. I'm going to break it up into three different parts. Basically, first we're going to talk about the overall process, like the roadmap and some definitions, things you'll hear people say when, technical things that you'll hear us talk about when we're talking to buyers. So just kind of explaining some of that stuff. Part two, we're going to get into loans. Part three, we're going to get into the various aspects of an offer and just kind of summarize everything. So, breaking this up into three different parts because there's a lot to cover and I can get a little long winded with stuff like this. So, just going to make it a little bit easier to digest. So, first off, just a little bit of info about me. I've been doing this since 2006. I started in the Portland area. Was a solo agent for a little bit before I started working on teams. I kind of found my calling early on there and learned a lot through other people. Eventually, in 2010, I moved to Washington, D.C. I lived there for 10 years and I worked on a very large team there that sold about 200 to 250 houses a year. I was involved in over 1 billion in sales during those 10 years. I no longer practice in DC. I moved back to Oregon in 2020 and I started my own business here in Central Oregon. Also serve the Valley, but more Central Oregon is my base. So I'm a real estate investor. I have property management experience. I feel like that gives me a kind of a unique aspect on things here, helping people in various ways to purchase and sell. Grew up here in the Valley in Albany, Oregon, and my focus is on customer service. So through all my years of working, I started with Alaska Airlines way back in the day, working in customer service and worked for McMenamins for a while. So it's always been a big part of what I do. I come to real estate really from like an educational focus. I really like to try to give people all the information they might need to kind of digest whether or not this is something they want to do, and really just try to guide people through and help them in any way that they need it. So that's a little bit about me. Let's get into the homebuyer guide roadmap. So, if you're new to this, you don't know some of this, maybe some of this is familiar to you, but I'm just going to approach it like you're coming here with looking to get information and you don't know much about this. So, first thing, usually people, number one, you're ready to buy. You've been thinking about it. I don't know, maybe you're scouring Zillow and stuff and you've been saving up and you're thinking like, I want to purchase a house. Usually the next thing that people do is they meet with an agent for whatever reason. That almost always comes before applying for a loan. Sometimes it's the other way around, but as a real estate agent, I'm often helping people navigate the entire process, and they'll come to me before they come to anybody else, and then I'll help you, find a lender, find your house, do all the different stuff. So usually that introductory meeting with an agent, we're talking about your goals and your timeline, what it is you want to do, kind of taking a look at your financial health and the overall picture so that I can really help you figure out what you can and maybe can't do. From there, you're going to meet with an agent or meet with a mortgage broker and apply for a loan. This stage here between two and three, and then actually going out and looking at houses, sometimes we're talking about like, I like to encourage people to do this as soon as possible. So if you're thinking about it and you're like, okay, I'm going to maybe be doing this in the next 6 months to a year, you should start talking to somebody now. And the reason for that is there's no real obligation to buy a house if you start going into the planning process with somebody. What it really does is just kind of get you set up for when you are ready to buy. There's no surprises, and you've got a plan and a roadmap in front of you. And especially on the loan side, so many first time buyers need to either save a little bit more, work on their credit, or maybe get some things off their credit. Um, whatever it may be, or they just want time to figure out what exactly they want to do or to find that right house. And most lenders, the ones that I work with anyway, are really going to, if you apply for a loan, you get pre approved well before you're actually out there looking at houses. They're going to look at your whole financial picture and they're going to help you figure out those things. So if you, let's say, for example, you have a 600 credit score and you want to get it up to 700 before you purchase so that you can get a better rate and be in a better position to buy. Lenders will should work with you to tell you exactly what you need to do to get your score from 600 to 700. And they can only do that by taking a full look at your financial picture. So if you apply for a loan, you give them all that information, they can look at everything. And the lender that I partner with has very often like helped my clients raise their credit score by 50 to 100 points in a matter of like 60 days just by doing a few things like pay off that Sephora bill or pay off that Target bill or move things around a little bit. It's not always about paying off all your debt. It's just about knowing what to do, um, and then just doing it so that your credit score will go up. And you don't have to pay like credit coaches or anything like that. But yeah, so that's why meet with an agent, apply for a loan, do that very early on in the process so that you know what you can do. Or you might find out that you can't do what you think you want to do. So you have more planning and you need more time to process all this, right? Which is totally fine as well. Once you're ready to go on that side, we run around and start looking at houses. That's the fun part for me. I love looking at houses with people, and that's usually what people enjoy doing as well. You get out there, get to see what works for you, maybe what doesn't, start narrowing down the search. Once you find that house, we go to number five, you go under contract. So you'll write up an offer. We'll get into the aspects of what an offer means in part three of this series. But going under contract simply means like you found the house that you want. We decide we're going to write an offer. We go through the terms. We write that offer. The seller either accepts it or counters us, and we go back and forth, and we come to some sort of an agreement, and it's signed and officially I call it ratified. We ratify a contract, and the house is locked up for you, and we begin the due diligence period, which is number six. So from going under contract from number five to number seven, settling on your home means closing on it. That's when the keys are yours. That's usually 30 to 45 days, depending on your situation, depending on what the seller needs. So we go under contract, we get to number six, go to due diligence. Those are inspections, those are making sure the title is clear, really checking out the house, looking under the hood, making sure that this is what you want, right? During those due diligence period, your contingencies, we're going to talk about contingencies later on as well. Um, you can usually back out of a contract for various reasons if you've uncovered something that makes you uncomfortable, and you decide this isn't the house for you. We can go back to number four and start looking again, and you can get out of that contract. If you get past your inspection contingencies, negotiate repairs, and everything feels good, and this is the house you want, those contingencies will end and you'll move towards settling on your house. The reason it takes 30 to 45 days is on the lending side. They are busy, you know, underwriting the file and making sure that everything is ready for them to lend you the money for you to close. This period between contingencies and closing, there's not a lot on the real estate agent side that we're doing. We're just kind of waiting for the lender to wrap up all their stuff and get the paperwork out because they're the ones that are giving you three, four, $500,000, whatever it may be. So settlement day comes, the county records it. You've signed all your documents. The county records it. It's yours. You get the keys. That's also another fun part of my job is giving people keys. And then I throw this one in at the end, referring your friends. It's always something when you close on your home. My goal is the relationship doesn't end there. I'm going to keep in touch with you. And if you ever have any, I don't know, you need a contractor, you have a friend that wants to buy anything like that, I'm going to help you figure out all those things as well. So that is the overall roadmap. And I'm realizing I probably should have just maybe done a four-part video, but let's get into some of the finances of home buying, just some things that you'll think about before you start getting into loans. Um, the key aspects, down payment, whether or not you're doing cash or a loan, most people are doing loans. That's for first time buyers anyway. Closing costs, how much you need, and reserves. So I'm just going to go through this quickly. You can ask me any questions you have about this if if you want to throw them in the comments or just, shoot me a private message or a text or something like that. So down payments can be anywhere from 0 to 100% of the purchase price. If they're 100% of the purchase price, that's a cash offer, right? Zero down loans. There's a lot of programs out there that help buyers if they don't have a down payment saved up, but you are borrowing more. You're borrowing 100% of the sales price, which means your mortgage is pretty high. Where can a down payment come from? It could come from you. That's the most common. You've saved up money. It can also come from family. If a family member wants to gift you money, if you're going to do that, you make sure you talk to a lender about the rules around that. It usually kind of has to season in an account. It can come from a trust. It can come from government programs. I'll do a separate video on some of those programs. Earnest money is another big one. That's like a deposit that you put in up front. It's part of your down payment though. So if, let's say, for example, you buy a $400,000 house and you put $4,000 earnest money down and you're going to do like a $15,000 down payment. 11,000 of that down payment would be due at closing because you've already put that $4,000 down up front. Earnest money is something you get back if you say cancel because of your inspection results. You'll get that earnest money refunded back to you. So cash or loan, we already kind of talked about that, but so it's the cost remaining minus the down payment. So if you're buying a $400,000 house, putting $15,000 down, you're going to get a loan for $385,000. Or if you are putting 100,000 down on that 400, you're going to get a loan for 300, et cetera, right? There's a few different types of loans. Conventional, some of the most common ones are conventional VA loans for people, military folks out there. If you're eligible for that, it's a great program. FHA loans are government-backed loans. Loans, the different types of loans come with different rates and different options within them. So that's another reason why it's important to talk to your lender up front to kind of get an idea of what the best type of loan is for your situation. Because usually, the type of loan you pick is going to depend on the rates you get and what your financial profile and all that kind of stuff. So they vary quite a bit, and you want to look at all of them to see what the best one is for you. Closing costs are another part of an offer that you want to think about or buying that you want to think about. They usually are about 3% of the sales price. Who do they come from? They come from you or the seller. You can also ask the seller to pay for your closing costs, and that's a negotiating term that we can get into. In this market right now, that is something that is pretty common for sellers to at least consider, but you have to think about the other aspects of your offer. If you're going to ask them to cover like $13,000 in closing costs, you might want to give them a good sales price so that they'll be willing to do that, right? And so what they consist of, what are closing costs? They're taxes, transfer fees, title company fees, and mainly lender fees. The lender fees make up the bulk of closing costs. So when you're thinking about buying, we kind of talk about this as cash to close. Cash to close is your down payment plus your closing costs. And you can sometimes get the seller to pay for the closing costs, which means you bring less cash to the table yourself. Reserves. How much do you need in reserves? Usually people recommend having about 3 months worth of mortgage payments in reserves, just so you're kind of ready for this. Those come from you. Like that should be in your bank account. That's not always a requirement. I think what a lender looks at varies depending on the type of loan that you're getting. So that is something a lender could look at a little bit more closely with you. But what those are for are really just to ensure that you have the funds to make your first few payments and you're good to go, and not going into this with no money and stress about how you're going to pay your bills. So that is it for part one. I've already gone over 10 minutes, so 13 minutes, I guess. So I'm going to stop this here and move on to part two in the next video. If you like this content, please like and subscribe and leave some comments in the comment field if you have any questions or anything like that. You can always reach out to me. I'm at 503-810-2723. Happy to help with anything you might need. All right. Thanks a lot.